Hi, good day. Welcome to our today's live session. I'm Akif Mati and I'm welcoming you all to join our live sessions today. So, you know, uh, we usually discuss about our past week's performance or our projection reports. So let's get back to that. And though I know a live, should have to be started on 9 p.m. So I thought I could start a little bit earlier to discuss about the previous week's performances and what we talked about, what actually happened. Let's just get hooked up on it. So okay, on Monday last week we had seen that French flash manufacturing PMI, there was German flash manufacturing PMI, there was GBP flash manufacturing PMI and services PMI as well for US dollar too. Now we had seen CB consumer confidence news, which was strong for US dollar, and after that we have seen Australian dollar CPI been reduced, and we have seen US dollar has raised its rate, interest rate from 5.25 percentage to 5.50 right now, and we had seen the FOMC press conference, and last week when we had discussed on our live that before FOMC, if US dollar acts strong, then after that it will act weak. That what actually we have been discussing in live session, and it actually eventually been happened in some cases, not all of the cases. So let's get back to it first of all. So let's go, let's go to the chart. Like on US 30, our expectation was that if it exceeds this level of 35,500 or something, it will shoot up to 36,000, but it eventually didn't happen. But it was on the you know uh, just on the our entry price, near so much near to our entry price. So I guess you know it's better that in entry thing we actually thought about last week right now is not valid. But anyone who actually been holding on to right now, if there is any to this zone, you can close as close as our entry price is, so that would be better. Now let's get back to another pair, USD JPY. On USD JPY we had informed that if the price closes this level, it has to touch this level, but eventually what happened, after getting a little bit rejection from this level of like more than 130 pips, it actually go to bearish movement up to 170 pips, and in this liquidity zone it actually reverted back and actually ended up the week a little bit in a little bit bullish stance. So that's what USD JPY had been through last week. On GBP USD we had informed, yeah, if the price crosses this level, it will eventually go this level. That was our first target. Then the TP2 was above than that, but from here, as we can see, it actually just missed our target TP1 price for 25 pips. But before that, it actually got a move of 80 pips on buy side for GBP USD. So right now, it also even nearly close to our entry zone. So if anyone holds up the entry and the entry is in this near these zones, I would suggest when the market opens, you just you know close it with any advantageous position you are in. Now we had projections on AUDJPY. Our projection for the last week was that yep, that if the price closes below this level, then eventually this is TP1, this is TP2, it eventually go a little bit lower than that too. So yeah, in our JPY prediction got correct. So this is how the last week market behaved with us. And our okay, let me check if the live is going on. Yes, I guess. Okay. now okay. So okay, so let's get back to our discussion. So that was, last week's scenario that we were discussing on the very first, part of the video. Now, in the second part, we are going to discuss about the news that's going to come next week. So let's see what news are coming next week. On Monday, we have CNY, Chinese Manufacturing PMI news. We have Australian dollar interest rate statement declaration on Tuesday on August 1 on the first uh, you know day of the month. We have Swiss franc bank holiday on that particular day on Tuesday, but we have very important news on US dollar, on ISM manufacturing PMI, and job openings JOLTS. Now on Wednesday, on the very first Asian session, Australian session, we have got news on NZD, which is on employment change and unemployment rate related news. On that very particular day, we have ADP non-farm employment change news. You have Thursday CHF news, CPI news, and on the same date on August 3, we have pounds official cash rate discussion, which eventually is on the forecast like this, that pound will increase its rates on 25 basis points. Could be, in the same situation, it could increase like 50 basis points up to 5.50. It depends. Let's see what happens. This important news on British pound will release on Thursday. On Friday, we have NFP, the most important news of the week. So this is the NFP week coming, guys. So we have to be very very cautious on trading on the markets. Now, to be key, to talk about the cautiousness about the market, let's get back to some of the news and some latest stories that's we gonna have a look at. Okay, before that, okay, where's the chatting features? That's what I'm gonna, yeah, that's it. So, guys, you can ask anything related to market as I'm with you right now, and I will try my best to answer your, quench and thirst of knowledge. So, let's get to it. Like, for example, before starting, we can get a little bit knowledge about, we can talk about a little bit demand and supply things. Like in any cases, for any physical product, if the quantity increases, and the price drops, so demand, you know, increases. The alternate thing goes for supply. If anything's price is low, quantity is low, then the supply should be also low. For in this position of a product, its supply price is high, quantity is high, supply is also high. So these are the relation between supply, demand, price, and quantity. So anything which is less price but huge quantity, so it has to be in a zone of huge demand and supply both. So but if there is something very you know high in price, so this is the demand line. The demand line on the very beginning, the price is high, the quantity is low. Later on it decreases and the supply increases too. So this is the one of the fundamental things we do acknowledge to know about supply and demand. Now, talking about fundamental analysis, we can say that it's a method of determining the intrinsic value of any instrument security to benefit from its trading. Now here it's been given as an example of a company or a stock. Now any company, like for example Apple, has microeconomic factors and macroeconomic factors. Like for example, we all know that Apple products has been manufactured in China for a long time. So anything that affects China has also a little bit effect on Apple too. Now, the technology is from USA, so yes, on the microeconomic factors, it's inbound users and also shareholders, partners, and mainly the users and customers are in these factors. But on the global scale, the factory workers who make Apple products is on the macroeconomic factors right now, and their market share of the particular manufacturing industry, and also the users, the market scale up, how much users is happy and rebuying the product. So these factors are on this side. So for the selection of the stock, if any you know price is undervalued, like the market price is less than the intrinsic value, then the suggestion is to buy. And vice versa, if the intrinsic value is less than the market price, then sell or refrain from buying. So that's the basic knowledge of anything. Like for example, we can talk about in winter we have a lot of production of like potatoes, so at that time the price gets dropped. Now on the other sense, at the other time of the year, we had to eat the potato stock beforehand, so at that time the price increases. So that's a game of supply and demand, and also on consumption, and that's going to apply to kind of like any trading instruments or physical business products too. Now talking about the fundamental thing of any country or currency, this hierarchy has been maintained by kind of like maximum of them, is that the central bank has kind of like three faces of it, and banks, they have four faces of it. So let me get to it in a bit short way, because for the banks, central bank has the very close relationship with the bank according to their operation, or monetary ecosystem of profit model. So let's just say a bank which works on investment funds and commercial companies. So the central bank gives money to the bank, and those bank provides to investment funds, commercial companies, and in some cases market makers. Now, in some cases, these market maker position, they make profits from the retail traders. Some of the retail traders make profits too. Now, for the investment funds, they also keep some money on the other bank, whose purpose is to manage with commercial companies and also hedge funds. And also, these kind of bank is been closely assigned to broker, like it could be real estate broker, it could be land broker, and also with the real retail trader. So uh, any kind of financial ecosystem needs this kind of hierarchy to maintain a long-term sustainability, and also the mode of transaction availability. So this thing applies kind of like maximum economy of the world. So this is the touch up for it, because in later on when we discuss, these things are going to be important, because we talk about interest rate hikes and many things and all. Let's just say central bank rises the interest rates, right? Now, if there rises interest rates, then these kind of retail traders, they think that okay, if I keep put money on the bank, then the bank would give me more money. So they put the money on the bank. Market maker gets some advantage with it, and also some investment funds and commercial companies. Then the bank eventually put some money on the central banks too. So this chain of action is going on and makes the economy stronger. Now, anything related to currency has some price related factors related to the intrinsic value we have talked about a little bit while ago. Okay, let's just say inflation is plays a very vital role to judge any economics or currencies price factors. The trade deficit of the country is also a very important factor. The public debt, the interest rates, trading regulations, and relevant commodity prices. Let's just say if the commodity prices is easily accessible with a good distribution channel, people can easily buy and sell commodity, and for that the trading regulations are very much sophisticated and very good. The interest rates are stable, it's not high on it's not low, it's just stable. And the public debt is very low because the people if the people are gonna save more, then the public debt is gonna be low. The trade deficit at that point is gonna come at low point because uh, public debt is low, so savings is more, and the extra money the government can put on to adjust the trade deficit to on buying and selling products. And then at last the inflation will then get low. So we have been talking about kind of like some factors for good economy. Now, the vice versa of it is the condition of a bad economy, whereas the inflation is rising, trade deficit is rising, public debt is rising, interest rate is rising, relevant commodity prices, gets high by time to time every day, and it's getting inaccessible or less available to the people. Trading regulations has been easily questioned, or people are scammed due to many loopholes of the trading regulations. So these kind of factors are for anything related to bad economy. Now we have been talking about good economy, bad economy. Then we have to talk about this thing. These two sides: early recovery, increasing growth; mid-cycle, increasing growth. The good economic condition A, then B, and here number C, late cycle, and then recession. Number D is the conditions of like bad economic conditions. Okay. Well. Good to see you guys too. Good to see you guys too. So, uh, I guess we have a good participants for today, and I believe that we all can connect that this kind of discussion is about fundamental analysis, and we are talking about different factors that can have to be looked on, because every week at this time we try to share our point of view on many market news and events, and also related to charts, so that you can easily relate to your strategy, and at least can be biased on a direction and use it as a filter, so that we all can be mutually benefit. So that's our goodwill and our target is. So we were talking about the good economic conditions and the bad economic conditions. So for any good economic conditions, on the increasing part, the corporate profits gets higher, the consumer confidence rises, the stock prices increases, and the monetary indicators kind of like that Fed are no longer wants to continue monetary easing policies. Then the short rates are flat, not that much jumpy move. Same goes for long rates. So, and economy indicators turn upwards, movement getting many positive values. The manufacturing scenario gets stabilizes. So these are the condition of the early recovery stage for good economy. And for the second part is that the inflation related concerns only expressed but not declared. uh, the consumer confidence gets rises, stock price also rises. Federal Reserve keeps it stands neutral on monetary indicators. So these are the factors for the that indicates about a good economy, and the vice versa of it is totally talks about the bad economy. Now let's get to the news that's going to come next week. We have already informed that in the next week we have two important I would like to say three important news that's going to release. Number one, on Tuesday, which is a Australian dollar cash rate and RBA rate statement. We have also CHF CPI news and GBP monetary policy report and a cash rate news on Thursday. And on Friday, our most anticipated and awaiting NFP of United States dollar, the news for which actually expresses the employment condition of US dollar. So that's going to release. So let's just get back to some of the newses and some of the pairs and some of the views of the from the different websites, so that to get you an idea what others people are thinking about it. Like say in USD CAD has been stubbornly pushing for a close above 3225 despite its unsuccessful attempts. So let's see it on the chart. Say let's go to USD CAD, but here we can see that it already closed above 1.325. So here we are, it just shoot up. So initially we can say that USD CAD is gonna touch at least 36 point above this level, and if continues it has a potentiality to touch or to move at least on these levels. Let me get a little bit yeah, yes, so that's how we are seeing it as a zone. And our second zone is close to this area. Let me just draw it for you so we all can have a better understanding what we are eyeing on. Yes. So these are the liquidity levels that we are eyeing on, and for the further downside, these could be a very important level to consider. Yes, but this channel is not that should be that much wide. It needs to be a little bit low like this. Yes. So for USD CAD, we can say that yes, as it broke up, closed the week above some significant good level. On the very beginning of the week, we are seeing that the price may touch to initially on these levels, like say on 100 pips. It can also touch 100 pips move and can touch 1.3365 or 1.337 levels from the last week closing. But that's not gonna determine the trend. Previously we have seen some of the conditions like the market when touch there, the RSI over here, it's also gonna touch there, then it creates a divergence and then the price falls, and we are seeing that price, if it falls from that to at least this level, it's already 200 pips too. So uh, there's a gap in the sell side too for USD CAD as we are seeing, and at the time the RSI will also shuffle down and then creates a divergence over here like that, and after that it will go buy. So two kind of scenarios we are seeing for USD CAD. For the buy side, we're gonna need a confirmation of closing on H1 or H4 above 1.325 levels, which is currently right now, but 1.3275 it will touch on the opening. That's what we are expecting, and then a little bit downside, some zigzags, some stop hands. So after that, when it actually get back again to 1.325, then I guess it will be a potential time to set the entry, and anything close to like 100 pips or 150 to 200 pips buy from that zone is quite okay, I feel. Now for the sell side, it needs to have a closing below 1.31 level on both H1 and H4, and then this will be the eventual targets for USD CAD. That's what actually we're seeing. Now let's see what they are eyeing on. They're eyeing on that if it breaches that bar this time, the pair could enjoy some more recovery through 1.3300 or 3380. So we are eyeing on 3300, 3380. We have actually been saw that the zone could be 1.337 or 65. So that's what actually we are thinking about USD CAD. Now let's get to another pair. Let's just say USD JPY it is. So on the daily chart, see it is showing these strong support a little bit. For H4, it's also on a good support zone. Now let's get back to the markets. First, how it's gonna react. Let's see. So we have seen on last week on the FMC time this candle occurred, and it actually created kind of like a structure, yes, like this, and similar to like this too, which actually telling me gut feeling that it has the potentiality to touch this level. Now for that, I believe that it needs to have a closing above this level. Yeah. Okay. So for identification, I believe, yeah, okay, that's good for the buy side. Now for the sell side, we can say that okay. Okay. So I guess it's okay now to discuss about USD JPY technically, because in some couple of days before we have seen that how it reacted according to the TDI. Now we are seeing some divergence kind of like scenario over here, and what we believe is that if the price anyhow for USD JPY closes above 142.8, then for the TP1 it could be like 25 or 27 pips, but for the TP2 it's like 50 pips above or 60 pips, nearly 60 pips. It's gonna go upward up to 148.6, or let's just say 149. Now for the alternate scenario, if the price closes below 137, now from 137 our target price on bearish side could be 30 pips below at 133.78 or 75, or more 130.25. So this is gonna be our thought on USD JPY for the upcoming week. What's that? Okay. So for technical side on the daily, on the weekly chart, we are seeing a channel been made for British pound, and also we're gonna tell you some of the things for British pound too. Okay. So it's like GBP Euro advanced to a 2-week high about 1.17 before a correction to 1.16. So right now GBP is on the power, and in some cases they have been talking about that the price may touch 1.312. So GBP is gonna go very stronger. So that's what they are thinking of. Now let's see what's gonna happen next. For economy is expected to post as 0.4% GDP growth for 2023 from 0.2% projected previously. But the year's forecast has been cut from 0.8 to from 0.8 to 0.8 from 1.9. So it's kind of like playing some value game. Target's been reduced so that the expectation get reduced and the target been met easily. That's the thing they're doing. Now for GBP side, we have seen that a good potentiality is being on the verge. For Bank of Japan, we are seeing that the stronger than expected inflationary pressure for Japanese yen has finally moved to weak in the policy, and financial markets seems busy digesting the news. So on that, contrary to that, we can say that USD JPY, there's a high chance it can go on the bullish side. Now we have to wait for the confirmation and entry according to it. So for that, don't forget to follow our YouTube channel and subscribe to our Telegram channel over here, right? You know, I hope you're seeing, guys. Forex Wave Expert channel. Yeah, this is the channel t.me Forex Wave Expert. The link is in the description below. I hope you will find all the details and the discussions where we will have on many pairs alongside the week. Okay, so okay, so let's just get back to the chart. Before that, we can talk about okay. If you have any questions, I would suggest that you will write here. Okay, now let's get back to US 30. Now for US 30, this zone has been interpreted and has created some confusion. Now our interest point could be like this. It just turned above and like this. For the sell side, it could be like this. So our potential entry zone is these two lines aligned. Now this could be okay, let me get a little bit yeah. So what we are eyeing on for US 30 is that if the price closes on H1 H4 above 35,700, then initially it has the potential to touch 300 points more up to 36,300 level. Sorry, 600 points more, and that could be the TP1, and the TP2 could be like another 600 points more level at 37,000. So that's the buying side expectation. Now for the selling side, which I guess is kind of like preferable for me, because it's been continued a rally for 3 weeks long. So a large sharp fall is really expected over here. So for that, it needs to close below 35,000 level on both H1 and H4. And if it happens, then the initial target from the bear side, it could be like 500 points below, up to 34,500, and then another 400 pips below our target 2 resides. So on the sell side, we're eyeing for this kind of like movement for US 30. Now for gold, we have analysis from the Forex Wave expert admin team. Like we have previously informed that there has been some complex structure been happening here on uh, gold according to the Elliott Wave analysis, but on the long-term move, our long-term bias is still on the bullish side. So before that, anything zigzag can happen. So let's just say for that, we are thinking that the price may touch this level, create some sharp spikes, and then it can shoot upwards. So our interest zone for buying liquidity for gold resides like over here, and for the sell side, it resides here. And okay, okay, now this. Now for gold, what we are seeing and what we will be eyeing on is that if the price closes above 1998 to 2000 level on both H1 and H4, then our target price one could be like on the like 500 pips above on 2050 level and more on the target 2 price could be 2100 level. And if the zigzag thing happens, creates some stop ons, and later on it decides to have any closing below 1915 to 1900 zone, then on the bear side our first target could be like 1850 level, and later on 1800 level. So this is the buy side and sell side expectation for gold, because uh, you know our preferred side is that it can has the opportunity to move upwards, okay, up to at least 2050, or let's just say 55 level. But in the midst of that, it has a potentiality to create some sell side or stop hunts. Now, if as there are many news is going to come this week, so by any chance, if there is any factors that we see that before the NFP news, the US dollar is acting weaker, uh, then we could say that due to NFP on Thursday or Friday, at that time only the US dollar could act stronger. Now, vice versa, if we see that on Monday and Tuesday, or let's just say on Monday and Tuesday, UK session, if we see that yes, the US dollar has been acting very strong, so we will expect on NFP news that the USD will act a bit weaker. So that's why the Monday closing is very important for every kind of pair to know that how US dollar is been behaving on that particular trading instrument. Now we have discussed about the gold movement. We have discussed that though our preferred move is on the bullish side, even if it alters its move and go downside, what could be the scenario? That's also we have discussed. Now for GBP USD, let's put our focus a little bit on GBP USD. So for GBP USD, we are seeing that there is an opportunity over here like this. Okay. So if we see GBP USD is like this way, we will see that last week there is a gap of you know supply and demand of like for more than 500 pips, because we have seen previously that GBP USD has the potentiality to touch and move more than 500 pips in a week, but we have to be very much cautious because this is a zone, it's creating some zigzags, and there's a high chance that in wherever it breaks, it will, move on full throttle and with full volume of liquidity. So that move cannot be traceable, may not be traceable. So that's why we will share our point of view for GBP USD on keeping a gap of like 500 pips over there. Now, if the on H1 H4 scenario we see the price reaches about 1.31, it has a potentiality to touch 1.34 levels. That's what we are eyeing on. Now, if on the alternate scenario it touches below 1.265 levels, then there is a chance that it may touch 1.2334 level. So on the both side we have an advantage of 350 to 400 pips, but it's a very important thing to have a closing above these levels. For GBP JPY, it's kind of like same. It actually been created some box-like structures and has been repeatedly informing us the potential moves is gonna provide. When the market opens, like if the pound been acting that much strong, like it's been, and we have also saw that and many articles discussed a little while ago. So according to that, if the pound pound gets stronger and yen gets weaker, then obviously there's a high chance that yes, the GBP JPY will continue to go more bullish. And we have seen that last week that it's been creating a little bit channel movement, and this channel break is very important, because other than that, new liquidity can be found and new liquidity cannot be hunted. So so this could be a potential scenario on the target 1 price and the target 2 price for GBP JPY, that if it closes above 184 level, then our target 1 price could be 189.7, and then for more, for TP2 it could be 195.5. Now on the sell side, if it somehow closes below 176.3 or 176 level, then our next target for bearish move is up to touching the level 170, and later on for target price 2 on 165. Now when we inform target price 1 and 2, it means that on target price 1 you need to at least close 80% of your volume or the trade being executed. That means our 80% of the target price should have to be in the profit. You keep the rest of the 20% volume of the entry, and to keep continue to touch on one the target price 2, and put a just a entry above your entry price, so that even if the price sets its order changes, it go downside, it can be on the profit, it doesn't hit your equity with a negative side. So that's what we can hope for pound next week. So we have discussed USD CAD, we had discussed US30, we had discussed gold, we had discussed USD JPY, GBP USD, and GBP JPY. So I guess that's all for now according to our discussion. Let's get back to if there is any question from your side. I see that there is no question yet. So I would like to tell you that if you want to express any of your concerns with us, you can always have access to these free signal channel for Forex Wave Expert. This is the link, and also the link is in the description right here and also right here. So for any questions, you can reach us anytime. We alongside our admin team will try our level best to attain you with best possible answer that can actually be suited for you. So as long as I feel there is no question right now over here for now, so we can actually end the session for tonight. I would like to say that if you feel that this kind of information sharing and discussion is very much appropriate and you like it, so don't forget it to hit the like button, and obviously share to your nearest and dearest one, so that they can get the care and also can filter the entries, and also can have a less lossy losing sides, so that they can also have the confidence to increase the profiting side on their portfolio management. So that's all for now. Thank you guys. I hope you have good time with me for now. I will again see you next week on the Sunday, same time, GMT plus 6, 9 p.m. for you. So till then, have a nice week ahead, and bye bye.